Preparing for a Islamic banking at Emirates Islamic Bank interview. You've reached Kandu Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share. And drop a topic request in the comments. Question 1. Why do you want to work for Emirates Islamic Bank? I am interested in Emirates Islamic because it combines Sharia-compliant banking with the scale and governance of the Emirates NBD Group. I see it as a strong platform to serve UAE customers who want ethical, transparent financial solutions. I would bring customer focus, product discipline, and compliance awareness. For me, the attraction is helping clients meet real needs while staying within Islamic finance principles and regulatory expectations. While answering, focus on Emirates Islamic's Sharia-compliant positioning, UAE banking presence, link to Emirates NBD Group, customer service culture, and how your skills match ethical banking, sales, operations, or risk needs. Question 2. What is the main difference between Islamic banking and conventional banking? The core difference is that Islamic banking avoids riba, gharar, and prohibited sectors, so financing must be linked to real assets or services. A conventional loan earns interest on money, while Islamic structures use contracts like Murabaha sale, ijara leasing, or mudaraba profit sharing. I would explain that the customer experience can look similar, but the legal form, risk sharing, documentation, and Sharia governance are fundamentally different. Make sure to cover prohibition of riba, asset-backed transactions, risk sharing, Sharia-approved sectors, and how Islamic products may have similar customer outcomes but different legal and economic structures. Question 3. Can you explain how a Murabaha financing product works? Murabaha is a cost-plus sale. The bank first buys the asset the customer needs, then sells it to the customer at an agreed profit and deferred payment schedule. For example, if equipment costs AED 100,000, the bank may sell it for AED 110,000 payable over time. The profit is fixed through the sale contract, not charged as interest on a loan balance. This preserves Sharia compliance. In your answer, talk about cost-plus sale mechanics, bank ownership before resale, disclosed profit margin, deferred payment, customer obligation, and why Murabaha is different from simply charging interest. Question 4. How would you handle a customer who asks for a conventional interest-based loan? If a customer asks for an interest-based loan, I would not criticize the request. I would clarify the need. If they want a car, home, or business asset, I would explain the Sharia-compliant structure available, such as auto Murabaha or ijara. I would compare cash flows, obligations, and fees transparently, then confirm suitability. The aim is education, not pressure, while protecting the bank's compliance standards and customer trust. Be sure to mention listening to the customer's need, educating without being judgmental, presenting suitable Islamic alternatives, explaining pricing clearly, documenting suitability, and protecting both customer trust and bank compliance. Question 5. What is the role of the Sharia board in an Islamic bank? A Sharia board ensures the bank's products, contracts, processes, and income streams comply with Islamic principles. It reviews structures before launch, issues approvals or fatwas, and monitors implementation through audits and governance reports. If non-compliant income arises, the board guides purification. In practice, its role is not symbolic. It protects the bank's reputation, customer confidence, and regulatory standing, especially in a market where Islamic credibility is central. While answering, focus on product approval, contract review, ongoing supervision, fatwa issuance, purification of non-compliant income, independence, and why Sharia governance protects credibility with customers and regulators. Question 6. What steps would you follow for KYC and AML compliance when onboarding a new customer? I would start by verifying identity, address, Emirates ID or passport details, and the customer's purpose of account. For companies, I would identify beneficial owners, trade license details, ownership structure, and authorized signatories. Then I would screen for sanctions, PEP status, and adverse media, assign a risk rating, and document source of funds. If activity later looks unusual, I would escalate through compliance rather than ignore or tip off the customer. Make sure to cover identity verification, source of funds, beneficial ownership, sanctions screening, risk rating, politically exposed persons, ongoing monitoring, suspicious activity escalation, and UAE central bank compliance expectations. Question 7. How would you grow deposits or CASA balances in a branch or relationship role? I would grow CASA by focusing on primary banking relationships, not one-off account openings. For individuals, salary transfer, debit card usage, mobile banking activation, and bill payments make the account sticky. For SMEs, I would target operating accounts tied to collections, payments, and trade needs. I would also use service quality to win referrals. Deposit growth should be sustainable, compliant, and based on customer convenience rather than only promotional pricing. In your answer, talk about relationship mapping, salary transfers, SME operating accounts, cross-selling bundles, digital convenience, service quality, pricing discipline, and avoiding aggressive behavior that harms customer suitability. Question 8. How would you deal with a customer who has missed payments on an Islamic finance facility? I would contact the customer early, understand whether the issue is temporary cash flow stress or deeper affordability risk, and review the facility terms. In Islamic finance, late payment handling must follow Sharia-approved rules, so I would avoid presenting penalties as bank profit. If viable, I would discuss restructuring, revise schedules, or recovery options within policy. The balance is empathy for genuine hardship and disciplined action to protect the bank's portfolio. Be sure to mention early contact, understanding hardship, restructuring options, Sharia treatment of late payment charges, documentation, collections discipline, empathy, and protecting asset quality for the bank. Question 9. What factors would you review before recommending finance for an SME customer? For an SME, I would first understand how the business makes money and whether cash flows support repayment. I would review bank statements, financials, VAT returns, existing borrowings, supplier and customer concentration, and account conduct. I would also assess management experience, collateral, industry outlook, and purpose of funds. Finally, I would match the need to the right Islamic structure, because financing inventory, equipment, and working capital may require different contracts. While answering, focus on business model, cash flows, bank statements, leverage, collateral, industry risk, management quality, repayment source, account conduct, and whether the proposed Islamic structure fits the purpose. Question 10. Tell me how you would handle an angry customer complaining about fees or service delays. I would first let the customer explain fully, because many complaints escalate when people feel dismissed. Then I would apologize for the experience, verify the facts in the system, and explain the fee or delay in plain language. If the bank made an error, I would own the correction and escalate quickly. If the fee is valid, I would still offer options. The key is calm communication, clear timelines, and follow-up. Make sure to cover active listening, apology without admitting unsupported fault, fact-checking, policy explanation, escalation, turnaround commitments, follow-up, and converting service recovery into customer retention. Question 11. How do you cross-sell banking products without damaging customer trust? I cross-sell by diagnosing needs before mentioning products. If a salaried customer keeps high idle balances, a savings or investment solution may help. If an SME receives international payments, trade or FX services may be relevant. I would explain benefits, fees, risks, and eligibility clearly, then let the customer decide. Good cross-selling feels like advice, not pressure. It increases wallet share because the customer sees genuine value. In your answer, talk about needs-based selling, suitability, product knowledge, disclosure of fees and risks, timing, relationship depth, avoiding mis-selling, and linking recommendations to measurable customer benefit. Question 12. If Islamic banks do not charge interest, why do customers still see a profit rate? A profit rate is the pricing measure used to calculate the bank's return under a Sharia-compliant contract. For example, in Murabaha, the bank earns a disclosed sale profit. In Ijara, it earns rental income. The rate may reference market benchmarks for competitiveness, but the income must arise from an approved sale, lease, or partnership structure, so the number can look familiar, while the contractual basis is different. Be sure to mention that profit rate is tied to approved contracts. Pricing reflects asset cost, tenor, risk, and market benchmarks, and the distinction between economic pricing and interest-based lending. Question 13. What digital banking trends are important for Emirates Islamic in the UAE market? UAE customers increasingly expect banking to be mobile-first, fast, and secure. Important trends include digital onboarding, biometric authentication, instant payments, card controls, personal finance insights, and smoother SME account services. For Emirates Islamic, the opportunity is to combine digital convenience with Sharia-compliant products and strong trust. The risk is that speed cannot weaken KYC, cybersecurity, or disclosure. Digital should reduce friction while preserving governance. While answering, focus on mobile-first customers, instant onboarding, digital KYC, payments, cybersecurity, personalization, branch-light service models, competition from fintechs, and maintaining Sharia compliance in digital journeys. Question 14. What key risks does an Islamic bank need to manage? An Islamic bank manages the same broad risks as any bank, including credit, liquidity, market, and operational risk. But it also has Sharia-specific risks. If a product is implemented incorrectly, income may be non-compliant, and reputation can suffer. There is also displaced commercial risk, where the bank may support returns to investment account holders. Strong documentation, approvals, monitoring, stress testing, and Sharia audit are essential controls. Make sure to cover credit risk, liquidity risk, operational risk, market risk, Sharia non-compliance risk, displaced commercial risk, reputation risk, and how controls, governance, and monitoring reduce losses. Question 15. What would you do if your sales target conflicts with customer suitability or compliance requirements? I would not compromise suitability or compliance to hit a target. Short-term sales that create complaints, regulatory breaches, or customer losses damage the bank more than they help. I would document the customer's needs, recommend only appropriate products, and explain alternatives if the preferred product is unsuitable. If I felt pressured to missell, I would escalate through the proper channel. Sustainable performance comes from trusted relationships and clean conduct. In your answer, talk about prioritizing compliance, refusing mis-selling, escalating pressure appropriately, documenting recommendations, offering suitable alternatives, and understanding that sustainable performance depends on trust and regulatory discipline. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.